If you watch this video towards the end, I revealed the two things that market seeks to do at all times. And when you understand these two things, you will stop getting trapped. You stop being used as a scapegoat all the time. Also in this video, I did a market outlook just as I do every day on some currency pairs. The same system every day, rinse and repeat, because I know that you just need to master one system. Just as I say every day, the market is random. Your way of trading should not be random. If you have been struggling looking for how to get a proven system, this is the channel to be. Watch these videos. You will just naturally know what to do, because I do the same thing. I explain the same thing every day. I emphasize on the same things every day. So there's no way you won't overcome your trading challenges on this channel. Now on this video, do well to watch till the end. Towards the end, I said some things that will transform your trading. And if you find this content very valuable, which I'm sure you will, please do well to like, subscribe, and share with those you know need it the most. Please don't hide it. The sky is wide for all of us to fly. Thank you. Okay, good morning, people. So this is the update of the trade I shared on this channel yesterday. It is going very well. As you can see it, I did a total slow breakdown on everything I did to pick that trade, and it's not strange. It's everything is the same setup, the same process, the same mechanical process I explain in every of my video. The same thing. I just do rinse and repeat on different pairs. Why I do this intentionally, so that you can get to master my trading system that works. Are you seeing it now? You can get to master it. It's easy to learn when it is the same thing I'm explaining in every video. Okay, so this is it. This New Zealand dollar, Swiss franc, NZDCHF. This is how it is going. I also placed a limit order Euro New Zealand yesterday. It was not triggered. I see spread came and did me dirty, but I'm still expecting price to come tap into this and push up. The breakdown of how I did this is in the video, the same video which NZDCHF, yesterday's video. Go and watch it. Okay, I did a very simple breakdown. I broke it down to the barest minimum for you to understand. The same process every day. Okay, so I said let me quickly do a recap for that. Are you seeing it now? Now let's go to I have some setups for today. I'm looking out for euro USD. Now I'm looking at taking a buy for euro USD. Now I'm going to walk us through the same process I take every day to take my trades. Nothing new. Okay, so let me clear this chart. Let's do it together. Let me clear the chart, so we'll look at it together. Good. So what do I want to see on 1 hour time frame? I want to see market sweep an old low. What first attracts my attention is when I see an impulsive move. Are you seeing it now? There's nobody whose attraction will not be attention will not be attracted by this. Are you seeing it now? So once I saw this, I said, okay, let me look at this area and see what is happening there. Are you seeing it now? So once I see an impulsive move like that, I say, it was sponsored by another block. Now, what do I want to see on 1 hour time frame? I want to see market sweep a low, an old low. Are you seeing it now? I want to see market sweep an old low and then turn around and break structure. So I want to see market sweep an old low, turn around and break structure. Then I will now look for the other block, whatever caused that break of structure. Market cannot push up like this without where the order started, where the push came from. And the push usually comes from what? A block of orders, gathering of orders. Are you seeing it now? So a block of orders, that's why you call it an order block. Are you seeing it now? Just like an oil block where there's oil. Are you seeing it now? Votes, there's a vote block during election where areas, specific areas where politicians are popular and they can easily get large amount of votes from there is a voting block. Are you seeing it now? So it's an order block where large orders, and it is evident by what? This impulsive move. Are you seeing it now? So what happened? What do I always want to see? I want to see market on 1 hour time frame. I want to see market sweep a low. I want to see market sweep an old low. You can see liquidity sweep, it swept an old low. Then I want to see it break structure on the other side. Go and watch one of my videos. The title is My 3-Step Mechanical Process. I totally broke down what I did. I totally broke down everything I do every time I take a trade. I did annotations, I broke down everything you need to know. Watch it. Okay, so that's how I take my trade. I broke down everything there. So let's walk through it again. And it's the same thing I do every day. So we want to see sweep of an old low. Are you seeing it now? After we have seen that, we want to see break of structure to the other side. Are you seeing it now? We want to see that too. And then whatever caused that break of structure, which is an order block. So once we have seen this, we'll mark it. We'll mark this sweep of this old low. So let me mark it as liquidity. Liquidity. Are you seeing it now? So there was a liquidity sweep here. Okay. Then there's a break of structure here. The break of structure, the actual break of structure that started is here. Are you seeing it now? This is actually the break of structure. But there's one overall one here. Are you seeing it now? There's one here. So we can also mark this one because that's where I'm picking my order block from. It came out of this accumulation. Are you seeing it now? It broke structure, it broke out of this accumulation. Okay. Let me align it properly. Top. Are you seeing it now? Good. So you're seeing, and what caused this break of structure? What sponsored this break of structure? This is it. Are you seeing it now? This is what sponsored that break of structure. So, and that is the other block. So I'm marking, this is what I want to mark now as my other block. This candle is my other block. I'll mark it together with this one. I usually want my other block to have, I say it on all my videos, the lowest point of my order block to be for a buy order block, the lowest point of this order block to be below the candle that is before it, irrespective of the color. The order block can be a green candle, it can be a red candle. Okay, and what I mark as order block can be a green candle, can be a red candle. So irrespective of the color, I want it to be at the middle. It should be lower than the candle before it. I use it now, and then the candle after it should be higher than it, should be at the tip. So to break that down, for example, look at these 3 candles. 1, 2, 3. There's no other block there, but if I'm to say I want to pick something as my other block, is this red candle, because the tip is higher than the highest point of this one, and the one that is following it is the tip, the highest point is lower than it. Are you seeing it now? So that's the kind of thing I want to mark as an order block. Are you seeing it now? Apart from, you cannot go marking everything that is like that, but from that impulsive move where it started, I want that to be it. Okay, so I'm going to go and mark. I'll mark this zone like this. Are you seeing it now? As my order block. Let me use a color on extended bar. Are you seeing it now as my order block? Are you seeing it now? So now I've marked the 3 things I need to mark on my 1 hour time frame. I want to see what a sweep of an old low or a breaker block. I want to see market turn around and break. I want to see sweep of an old low, a breaker block. I want to see market turn around and break structure towards the other side. Okay, then I want to see an order block. I want to see what caused that break of structure. Okay, now after I've marked that on my 1 hour time frame, what do I now want to do? I want to now go to my 15 minutes time frame. The next thing I want to see is that I want to see that while price, because in an order block, when the orders once that moved here, there is memory and there are still unfulfilled orders around here. So price will usually come back to this place. Price will usually come back to this place and then push back up. Are you seeing now? So price will usually come down to this place and push up. So so while price is moving back, we want to see an inducement. That's the next thing I want to see. I want to see that while price was coming back, gentle retracement, I want to see that when price got close to the other block, it shifted structure, did as induce early buyers, people that could not wait, and then now comes back. What is this? Excuse me. Let's do that again. So while price was coming back, let's do it. I'm just rushing through it. I want to see once price is close to it, that price gave an inducement, shifted structure, did as if shifted structure, and then come down back. Now this shifting of structure is to induce early buyers. It has started buying, it has not gotten to play. They rushed in, then price will now use their stops, their stop loss, because this place will be too far for them to put their stop loss. Price will now use their stop losses as liquidity and pair it with the remaining pending orders to push up. Rinse and repeat. This is what I do every day. Now that inducement, you look for it. I scale down to 15 minutes time frame to look for that fake market structure shift that I call inducement. Okay, so I'll scale down after so the 3 things I do on 1 hour time frame is to get my sweep of external liquidity or a breaker block, then break of structure to the other side, and then an order block that caused that break of structure. Okay, so I'll now go to 15 minutes time frame. I'll go to my 15 minutes time frame. I can come here to refine the actual spot to get the actual order block, and I'm seeing this as being it. This red candle should be the order block below, and then this one is above it, so it is this. But me, I'm just keeping the one of the 1 hour time frame. Are you seeing it now? So that I don't get missed entries. But I'm sure the price will most likely come around here. Or if it is not so clear, I'll go to 30 minutes time frame. Beautiful. You can see it's looking just the way I want it to look. This red candle is the other block. Are you seeing it now? So if I would want to refine, this now, I'm going to mark this 30 minutes candle. I'll refine it to this 30 minutes candle. Let me mark it. I've marked that other block. Are you seeing it now? So that place is where I'm expecting price to come and tap, it will use this place as, because there's certain people that would have entered this market here, it will use their stop losses as liquidity, yeah, and pair it with the remaining pending orders from this other block to push back up. Are you seeing it now? So let's look for our inducements. Okay, now I usually look for my inducement on 15 minutes time frame. Okay, I always look for my inducement on what? On 15 minutes time frame. So let's go to 15 minutes time frame. Usually I mark, you can see it in here, so you can see that it's still the same thing with that red candle on 15 minutes time frame. The other block we marked, you can see it's still roughly the same thing. So you don't have to be exact. This one, you haven't missed entries. Usually when I want to place my long tool, my buy order now, I will come above this place a little so that I won't have missed entry because of spread or whatever. So I'll come above here to take my entry. Okay, so now what do you want to see on 15 minutes time frame? So forget about the 30 minutes time frame. I just used it to refine my entry. Normally I just go from 1 hour time frame, I move straight to 15 minutes time frame to refine the entry, and then get my inducement. What do I regard as inducement? I explain this every day. I'm going to explain it today again, so that any video you watch you get value. Any video you watch you get value. Yeah, I'm giving my best in every video. So market pushed up. So while market was returning to the other block, are you seeing now? You want to see a fake market structure shift to the other block. Want to see a fake market structure shift. Okay, give a low here, give a high here, give a low here, give this, then range there, and then give a market structure shift here. Let me pause there. You can see that people that were here at this point, let me remove this so that I can show you clearly. At this point, some people thought the market has shifted from sell to buy. So many people at this point would have entered from here. Are you seeing it now? They would have marked this as their order block. Are you seeing it? People that are trading 5 minutes lower time frame, they would have marked it and look at it. Market reacted to it and went up. Are you seeing it now? So that's what they always want to do. They want to, when they are coming, when the market is retracing, coming close to the other block, it will do a fake market structure shift to induce early buyers. Are you seeing it now? To induce early buyers. Are you seeing it now? They think, okay, now the market is turning, and then the market will tap them in and start giving them profit, and they are happy. Are you seeing it now? Not knowing that it is just inducement. Their liquidity, they are being used to generate liquidity. So the market will come, trigger, because their stop losses definitely will not be below this place. It will come trigger their stop losses as their stop losses, pay it with the remaining order from the other block that was not executed, and then push up. So let's mark our inducement. So the inducement occurred here. This inducement, so that's our inducement. Are you seeing it now? And then we have our inducement break of structure. The actual inducement break of structure happened. It happened. This is the point. People thought, oh, market is now buying now. This is inducement break of structure. It happened there. Inducement break of structure. Are you seeing it now? That's where the inducement break of structure happened. I don't know if you are following. Good. So, haven't seen this. We'll just come straight ahead. We'll come here, and your inducement, just as I explained, you cannot take this as inducement and inducement break of structure. You cannot take that because it's not up to 50%. Are you seeing that your inducement should be 50% down of this whole range? I explain this every day. Why I'm doing this, so that any video you watch, you will get something. But watch more of the videos you watch, the better. You see it now. If you look at from here to here is the range, is the full movement. So your inducement should happen at least below half of it. You see it now. Sometimes close to it, it should, because when it is around there, nobody thinks that it has not retraced now. It has not even gotten to the other block. So you want it to be close to it, at least below half of it, very close to it. Do as if it is shifting. I think that is usually the last move to induce early buyers. People that are not patient enough to allow the stuff to get to where it should get to. Okay, so it needs to be your inducement, a valid inducement should be 50% below. So let's pick from where this other block is now to this top. Are you seeing it now? So your inducement should be around this area, below this area. Are you seeing it now? This is where your inducement should be. And inducement, are you seeing now? This around this area, between 50% and 25%, or even below. That's where your inducement should be. Okay, that's the area. Anything here, yeah, it's not it. Are you seeing it now? So now this is how we do it every day, irrespective of the outcome. Our target is not the outcome, our target is the process. Do it right. Then when I want to place my buy entry now, I won't put it exactly here. I'll just come above, some pips above, so I don't get missed entry. Then I can target this high, but usually I target internal liquidity. Are you seeing it now? But this one, because the market is actually trending up, so I can conveniently target the high of that market, this high. But I won't just put it on the high. I'll just come down a little. Are you seeing it now? This is the setup, Euro USD. Beautiful, right? So I think I saw another setup. I'm not taking GBP USD. It's not so clear. But this is my outlook for GBP USD too. Are you seeing it now? 1 hour time frame. 1 hour time frame. I'm not so clear on the. I'm not confident about this one for GBP USD, so that's why I'm leaving it out. I'm not partaking in this. I'm moreover, I'm already I already have an order on Euro USD. So even if it was good, I wouldn't take Euro USD and take GBP USD at the same time. I will take one of them because it will be dangerous leveraging too much on the dollar. Are you seeing it now? And those pairs usually want to move in the same direction. So if it goes bad, it will not go bad in two places, which doesn't make sense. Okay. So this one's okay. Nasdaq. What's my outlook for Nasdaq? Now I gave a trade. I explained the trade setup for Nasdaq the other day, and it played out well. But I got out with a 1R. I was tired of holding. But I will re-enter. And why I got out with that I would have even lost the profit if I had not gotten out. Not that I would have lost the profit, but it would have gone back to my entry because I saw structures that would have made it go back to my entry. So that's why I got out with 1R. I got that. Let me show you this. Let me quickly run through the setup. Everything, the explanation is on this channel, not too far from this video. Go and watch it. But this is what I did that day. I saw this external liquidity sweep or breaker block. This was meant to be an order block. Price swept this old high, came back and broke structure. Okay, so this is the order block, this green candle. So that day I'm rushing through this one. I marked it. So what do I always want to see? I want to see an external liquidity sweep or a breaker block. Then I want to see a break of structure. I want to see an external liquidity, that is an old high being taken out. Let me mark that. Let me quickly run through that. I've explained this already, but as a teacher, I won't assume that everybody watching this has watched the other one. So let me explain. I want to see an external liquidity sweep on 1 hour time frame. Liquidity, are you seeing it now? Then I want to see market turn around and break structure on the other side. Break of structure. break of structure. Let me align it properly. Left so I can see break of structure, and then I want to see another block that caused that break of structure, which is this green candle I've already marked. Okay, so after doing that on 1 hour time frame, what do I do next? You can guess it. I'll scale down to 15 minutes time frame and refine this other block to that of 15 minutes time frame to get where it happened on the 15 minutes time frame. So on that day when I came, I zoomed, and I was very fortunate enough to see this red candle in between that looks like a doji. Let me zoom out so that you can see properly. You see the way I'm spoon feeding everybody now, so that you can understand. Okay, so this particular candle, you can see that that's what I marked as my order block. It is above the high of this green candle, the candle before it, and the high of this candle after it is below it. So I want it to be at the tip, shoot out. Are you seeing it now? So I will come to 15 minutes time frame and refine my order block to this spot. Are you seeing it now? So that's it. It's extended. So once I refined it, that's the order block. Now what do I want to see? I want to see that when after price moved away from it, finished the movement, when it was returning back to it, Meanwhile, I've taught how to learn market structure and directional bias. I have videos on it. Go down. You see one of my first videos. I took my time to break down market structure, and it's very important. All these things I'm doing, market structure is part of it. So I want to see market while moving back towards this guy. When it gets close to it, it gives us a fake market structure shift. It gave us a fake market structure shift here. So some people would have tried to sell here. It will give them little profit here and take them out. It gave first one. It came here again and did another market structure shift. Here. Once I saw this, I said, hey, glory be to God in the highest. Are you seeing it now? I now came and entered here. Are you seeing it now? I put my pending order here, and then the market started coming down. I'm going to show you where I got out of the market. So I placed my pending order here on that day. My stop loss was just where it, okay, yes, just above it, and then I wanted to target this low. That's what I targeted that day. Are you seeing it now? So if I was still in the trade, you can see that it's still going well. Now I got out of the market. So this is how I targeted it. You can see that the market even, oh, sorry. You can see that the market even gave, okay, it gave about 3R. Also, let me check. The market gave 2.8R. Okay. Now this is where I got out of the market. I got out here. That was yesterday. I got out here when I saw that market seemed to be shifting structure to the upside. So I got out here. And why did I get out of the trade? I was seeing another setup. I was looking at this place. I was thinking that market will come back here to my entry to tap into this and start dropping. That's why I got out. Okay, so let me just secure that. Let me see the profits that it was 1R. It was 1R. This is it. So that there, I got out. I think I got out here. It was 1R that I got from the trade. Then I just closed. So I was not feeling good about the trading, so I got out. Now there's another. You can see that it's playing beautifully, and I'm sure that market will get to that place we want it to get to. Okay. I'm seeing another setup here. Market is giving me another setup here, and that's why on 1 hour time frame is when I saw this. when I saw this, I saw this break of structure, I saw that market did not come to fully mitigate it. Had it been market came, this retracement mitigated this, I would have left my trade running, knowing that there's nothing market wants to go back to look for again. I using it now to drop, but market did not do that. So I was thinking our market would want to go back before coming back down. So this is what I am looking at on Euro USD now. The same things I look for. I was first seeing this as a setup that market will come on 1 hour time. What do we want to see? We want to see market sweep a high, which it did, turn around, break structure. It broke structure here. It did not break. This one gave a week, came back, did not tap anything, and then broke structure. Are you seeing it now? So I was first looking at selling from this zone, but I don't like the way the thing is looking here, to be honest, and I'm seeing this as a trap. Internally generated liquidity. I didn't in market, even when coming here, it came and swept this internal liquidity or tapped here. I'll be confident to take this sell setup, but this is most probably a trap for me. So where is the setup that I'm seeing on Nasdaq? I'm seeing this other block, this red candle here. It gave a break of structure. Market has not mitigated it, so I'm using it for my entry. So what am I looking for? I'm seeing, let's say, this one to this place, looking like, okay, this is an upward push order block that was disrespected. So this is a breaker block, and you can see it swept a seeming high here. Are you seeing it now? So let's mark. So these are liquidity sweep. This took out this order block. Are you seeing external liquidity sweep? Took that out. Then break of structure to the other side, and you should be able to market structure. I have a video on it, just as I said. You go up, you can see market came here, came down. So there's a break of structure. You can see it now. So then we have a break of structure, this low that gave the other push. This is break of structure on 1 hour time frame. That's what we always also want to see. Break of on 1 hour time frame. We want to see external liquidity sweep or breaker block. We want to see this break of structure, and then the other block that caused that break of structure. Now this other block has not yet been mitigated. That's why I want to take this trade. Are you seeing it now? So let's mark this other block. This video is getting long already, but it's good for your education. So this other block, are you seeing it now? 31 minutes. This is the other block on 1 hour time frame. So now let's refine on 1 hour time frame already. We have something like that is an inducement that we can regard as an inducement. Look at from this other block, what did market do? The market came down, retraced, came and gave an equal low here, retraced, came back down, and gave us. Are you seeing it now? It's now returning back to the place. Are you seeing it? It's doing as if it wants to go back to this other block. It came up here, did this, came and swept liquidity. Anybody that sees this will say, this market will not use this other block again. That means it will not use this other block again. It swept liquidity and drop back down. So their conclusion is that market is going to come back and use something here to drop. But the real issue is that market is not going to use anything here. This is all inducement. Market will come and tap into this unmitigated order block and drop. So it's a signal for educational purpose. I'm not saying you should go and trade it, but if you want, you risk an amount you are willing to lose. I don't risk more than 0.5% of my account at all times, no matter how good the setup is. No matter how much it meets my criteria, I don't risk more than 0.5% of my account. So now let's So already, let me delete this. Already I have my inducement. I have my inducement even already on 1 hour time frame without scaling down to 15 minutes time frame. I have my inducement here. This is inducement. Are you seeing it now? Inducement. Then you have inducement that broke structure. It broke structure. Your inducement must turn around and break structure to convince people that it's already going. This inducement break of structure. Inducement break of structure. Are you seeing it now? So market will just come straight up here, and then we target where I wanted to target originally. I'm targeting this low, this 11.6R or internal liquidity. Let's target the inside. Target this 7.9R. Are you seeing it now? You have to wait for this patiently. Okay, and it may not trigger today, it may trigger tomorrow. And see, price, there's nowhere is too far for price to get to. Once liquidity, if they want it, they will get it. Are you seeing it now? So you can see that we did everything here on 1 hour because we had everything on 1 hour. You can still, if you go back to 15 minutes and do just the way we do it at all times, you can see it on this 15 minutes time frame. This is the other block. You refine it to this spot. So this is where market will likely get to before it starts turning back. Are you seeing it now? And you can see the inducement. Market was moving. When it got to this place, are you seeing it now? It did a fake market structure shift, turn to the other side. So most people want to come and enter back here. Are you seeing it now? So you can see it's the same thing on 15 minutes time frame. Now I'm using the 1 hour order block because I don't want, there's enough liquidity here already on 1 hour. So market may just come here and not deep into this. You can see this fair value gap is already mitigated already. It may not deep into this. I don't want to have missed entries. So I'm using, it's not looking like another block here, but on 1 hour time frame, you can see it is clear. So that's why I'm using it on 1 hour time frame. And thankfully, on 1 hour time frame, we have our inducement clearly shown there. So you can see the setup, simple. Also, US30, I have a setup that would, if it plays out, to be very sweet one, very sweet one. Look at it. So what do you want to see? This 1 hour time frame, Dow Jones, the Dow Jones, that's US30, the 30 strongest index of is it the 30 strong companies in US. Okay, so what do you want to see on 1 hour time frame? We want to see a sweep of an old high, but this is accumulation, manipulation, and distribution. But let's just leave that. Sweep of a high. I used to understand the market in one way. I did not understand. I have learned a whole lot of things before I got to this simplified level. So some of those things guide my decisions. But you see, if you can follow it, you don't have to spend years learning things that are not necessary. You can just stick to what I'm showing you like this. You will see speed. Okay, it will shorten your journey. So we want to see taking out of an old high. This was supposed to serve as an order block. I see it. The market came and disrespected it, passed through it, making it a breaker block. So we want to see a breaker block, sweeping an old high. We want to see market turn around and break it. That's break of structure. That is on 1 hour time frame. We want to see sweep of an old high or a breaker block on 1 hour time frame. We want to see market come back and break structure, pass through it. That's break of structure, and then we want to see something that caused that break of structure and other block. So those are the three things we want to see. Now let's mark. So what are we marking as our order block? This green candle, 1 hour order block. This green candle is our order block. Okay, so let's mark that. This US30 trade is far from ready. It's not ready yet. We just have everything for 1 hour. The ingredients for lower time frame is not there yet. So that's our other block. Let me make it transparent. Good. Are you seeing it now? So we scale down to 15 minutes time frame. So what are we expecting from this market? Now the other block is looking very good too on 15 minutes time frame. Look at it. This green candle, very good. So we can refine it. Let's refine it to 15 minutes time frame. It's looking very good there. nothing mitigated at all. So these are OB, other block, 15 minutes time frame. So what do we want to see here? We want to see markets while retracing, going back. You can see that market has moved away from the other, that's the other block. Now while market is coming back to the other block, can you see it is going back to the other block? While it is going back, forming a temporary uptrend, right? While it is going back, when close to it, want to see do as if it's shifting structure. This thing did not get to the other block. It shifted structure. It shifted structure. Some people are rushing. Oh God, and they are rushing. They can't wait. They are doing what they have fear of missing out, and that's what market is designed to do, to spur up your emotions and make you take irrational decisions. That's what they bank on most times. They know that traders know what to do, but they throw everything out of the window when they are emotional. And one of those things is for them to induce you. That inducement is to spur up your emotions so that you enter early. Then they use your stop loss as liquidity and pair it with their remaining orders that was remaining at the other block. Simple. Are you seeing it now? And so that's something I've understood, that is my trading system. It became my trading system. Okay. So they now give you an inducement. They do as if they shifted structure. So some people have their pending orders here to enter. Some people just rush immediately. It broke out of this place, closed. They entered, thinking the market is coming down already. Then they will now turn around, use their other block, trigger all your stop losses, and then drop massively. They will drop down to where there's another block on the opposite direction. That's your 30 trade for you. So this is my outlook for it. You can see it. Why am I able to explain this as if I'm the market maker and it happens like that? I'm not the market maker. I've just I've just been aware. I've mastered and known that there are two things that run the market. Liquidity. That's the essence. Liquidity is money. So the essence is money, right? So they are looking for what? Money. And then two things, they want to rebalance, they want to balance inefficiencies. Wherever there are gaps, market wants to be efficient. Efficient market is when there are no gaps. When the price of Gary is moving from 200 naira per mudu to 1000 naira, that's not an efficient economy. That's not an efficient market. Are you seeing it now? An efficient market is the one that price changes are not so wide. Are you seeing it now? So whenever, so let's say if Gary wants to go increase that should be from 200 to 220 to 230 to 240, is increasing small, or is reducing small. That is an efficient market. And inefficient, it means, okay, these people are, that market is balanced, they have storage. Whenever there's bumper harvest, they store enough, it doesn't spoil, so it's never scarce at all times. Are you seeing it now? It's never too cheap at all times. That's an efficient market. But if a market is not efficient, that means when there's harvest, it will be excess. They cannot store. People will buy. It will be cheap. Then people will sell out on time because it's going to spoil. They cannot store. Are you seeing it now? That's an inefficient market. And in such markets, you have times when it will be very cheap. It will be very cheap, and then sometimes it might become very expensive. Inefficient market. So whenever there are gaps, when price moves with leaving gaps like this, you can see this part of this market is efficient, no gaps. So when it's leaving gaps like this, an inefficient market. So what will market do? Market will always go to balance this inefficiency. Are you seeing it now? It will always go to cover that inefficiency. So whenever the price of Gary moves from 200 to 1000, that is inefficient. So what will happen naturally? At some point, the price from 1000 naira will start dripping down towards 200 naira to make it efficient. Are you seeing it now? So market seeks to do two things: to balance inefficiencies and for liquidity, because it is liquidity that there are big players that are involved that cause this inefficiency and they want to make money from it. So market is for making money, and that money is liquidity, and it's people stop losses and sell orders that makes those liquidity available. So market seeks to do two things or three things To balance inefficiencies, it seeks liquidity and then equilibrium to make price average equilibrium, which is also balancing of inefficiency. Are you seeing it now? So it fills gaps, make it an average economy. That's why in working systems, in countries where their system is working very well, you may not really know the difference between the rich and the poor. They all go to the train station, they all enter buses. Are you seeing it now? They have basic amenities. The gap is not much because it is an efficient economy. So I don't know, maybe with this talk you should click something to you. Trading is not, you can explain it with everyday life. Connect it to everyday life and it will be easy for you. Okay, I think this video is getting long. So please do well. I don't think I should be telling you to subscribe now, right? Haven't watched this video and listened to everything I have said. You do yourself some good to subscribe to the channel. So every video I put up videos like this every morning, and I'm confident to do that because I know what I am doing. And then, and part of knowing what I'm doing is that I am not looking to always win. My own is to execute my system, and I'm sharing it with you, irrespective of it being whether it's a win or a loss. Are you seeing it now for that particular trade? Okay, because every trade does not define you. It's you following your system that has been proven to work that defines you. Okay, and that's what I'm trying. I did this channel for, to help you. Okay, and help ourselves. Okay, so enjoy your day, trade responsibly.